Hi everybody, this is Barry Parker for Capital Link Shipping. Today we are interviewing Aristides Pittas, who is the chairman and the CEO of Euroseas. Euroseas was listed in early 2007 on the NASDAQ. The symbol is ESEA. 2 years earlier, the business of the Pittas family, which was started in the mid-1800s, was consolidated into Euroseas. So it was started on the island of Chios. Were those ships just in the Mediterranean, or were those trading all over the world?
Initially, the ships were in the Mediterranean. There were sail-powered ships, Barry. They couldn't go that far. The
Wow.
trade was in the
Wow.
Black Sea, Mediterranean.
We've come a long way. So the fleet now consists of 18 vessels. 7 of them are bulk carriers, and that includes one that's under construction. And those total approximately 500,000 deadweight. And there are also 11 feeder container ships, which aggregate approximately 25,000 TEU. The bulk carriers are Ultramaxes, Panamaxes, and Kamsarmaxes. So those are roughly between 60 and 80,000 deadweight. The container ships are mainly 1,400 TEU to about 2,500 TEU. And those are feeder container ships. So Aristides, Euroseas is straddling 2 different segments of the market. It's container and dry bulk. So we have a chance to ask for your opinion and your insights on both of these. And then we'll shift the discussion to Euroseas itself. But let's start with the markets. So the first question I have, dry bulk. We've seen a definite recovery in the market, but I'm curious what's behind the recovery, and do you feel it's sustainable? There's certainly a diminishing order book, but there's also a demand side which has been strengthening, and perhaps it's a combination of both. So looking ahead, curious, is the recovery sustainable, and do you think we can expect better days?
Well, Barry, I think you answered the question yourself, really. This is a very simple business, supply and demand driven. The demand has been relatively strong this year, quite strong actually, coming mainly out of China, but all over the world. We have had big growth all over the world. So demand has been good, coal and iron ore into China have been good, and therefore we have had a good demand side. On the supply side, we have had fewer deliveries this year. Ships have been cancelled, deliveries have been slipping. This was the reason for the good years. Will that continue? We think it will. We think that definitely we know that the supply side is really very well protected because there's very few dry bulk vessels coming out in 2018 and 2019, so for those 2 years the supply side is definitely going to look good. The demand, of course, will be the swing factor. I think that it will continue being a good market because more iron ore and coal are being produced by all over the world at much cheaper prices than the prices that China can afford to come up with the cargo. So I think the demand is also going to be good during the next couple of years.
Okay, and then later in the interview we'll talk a little bit about regulatory factors which might have some influence on the supply side especially. One of the things happening at present, there's a little bit of a disconnect between the freight rates and the asset values. The freight rates have strengthened, and some of the analysts are saying the asset values have strengthened, but not as much. We've heard the argument that once the rates become, in particular term rates, like time charter rates, become stronger, this can lead to further asset appreciation. Is this the right expectation? And is it a good time still to invest in the dry bulk side?
Well, having said that, I expect 2018 and 2019 to be better years than 2017. Obviously, we expect charter rates to improve further. Charter rates are currently at around 70-75% of the historical averages over the last 20 years, if you take away the 2 or 3.
There were some that it was off the charts.
Yeah, there are some that are off the charts. So you take 8 quarters out of data from the last 20 years, and we are at 75% of historical average charter rates. Prices are also at around 70-75% of historical average prices. So if we approach those 20-year averages, I think that we can see significant improvement in both charter rates and values.
So probably still a good time to be investing.
It's probably still a good time to be investing. The absolute best has been missed because you should have invested in 2016, and I'm happy to say that to the extent that it was possible, we did it as Euroseas, bearing in mind our financials at the time, but that was the best time to be investing. It's still a good time to invest.
Okay. Let's switch to containers. We have similar questions. There's been a modest recovery in the container market. It seems there's a lot of investor interest kind of bubbling in anticipation of a further recovery, and then also there have been some of the container companies have now been raising new capital. So I'm wondering about your market outlook, and I know you specialize in smaller ships like feeder ships. So whether you have an opinion about how the smaller ships might do compared to larger ships.
Sure. It's true. The situation seems even more promising, I think, on the container sector right now. If you look again at the historical averages, for whatever that says, we are now at asset prices for 10-year-old 2,500 TEU container ships, which are at around 45% of the historical average. They've picked up from the low, which was about 35% or 30% a few months ago, but they are still extremely low. And extremely low are the charter rates as well. They're at the same levels, 40-45% of the last 20 years after stripping out the best and worst quarters. So clearly there is a potential room for this to improve, and I think that we will see that improvement if the world continues growing at the pace that it is currently growing, and all experts seem to agree that there is no real fear of a huge market downturn globally. Container trade is very, very relevant to the global GDP trade.
Yeah, it has a multiple.
It has a multiple. It used to be
It used to be 3 times.
Yeah,
now,
it used to be 3,
less.
2 now, but it will be at least 1.
Yeah.
So it's come down as the market has matured, and there's it's begun. Container shipping is just started in 1970 really, so it was maturing up to very recently. Now it's mature, but we expect it to grow at a slightly faster pace than GDP. So that's general about container ships. Now if we talk about the larger and the smaller container ships, for sure all the vessels carry the same cargo. It's one cargo. It's not like dry bulk where iron ore is carried by the big ones and smaller vessels carry other cargos. Here it's one cargo. So obviously rates move a little bit in parallel for big and small ships as well. Of course, the small ships serve smaller regions. They don't do the big transatlantic trades, and the growth we are all seeing is on the big vessels and on the big trades. The smaller vessels have had a much lesser growth in number of ships that are being delivered. The fleet is older, more are being scrapped. For the younger ships, we can expect that the fleet will be actually shrinking. But some of the middle-sized ships are taking a little bit of the business of the smaller ships.
Yeah.
So there is always this cascade process happening. So I think that generally container sector moves in parallel, but the opportunity is there now to see a little bit outsized returns for the smaller ships compared to the bigger ones.
I was going to ask you, I don't think I have to ask you, whether you're, because you're in, it's an interesting company because you're in both sectors, but your enthusiasm is probably a little bit more for containers than if you had if you had to pick one over the other.
At this stage.
Yeah.
At this stage, Barry, I think that the containers have more upside to go. They are still charter rates and values are at historical lows. The world is growing at a fast enough pace.
Mm-hmm.
We don't have too many deliveries in 2018 and 2019. There are some on the bigger vessels. The smaller vessel fleet is going to become smaller.
Yeah.
So I'm quite optimistic that we will see a recovery towards the averages within the next couple of years.
And I think with those big ships that you read about, they get a lot of attention, like 21, 22,000 TEU vessels. Those can't go to too many ports, so really the need for smaller ships to act as feeders is actually increased.
Exactly. The cargo is increasing, the amount of cargo is increasing, more ships are needed. We are fairly optimistic on that sector.
All right, let me ask you a related question. Just in your company, you've bought some of the ships are secondhand ships, but you've also engaged in some new buildings. Can you give some color on that? You know, where there might be a greater opportunity. I understand you probably analyze each investment. Each one is different, but
each investment is different. We look at all the investments purely individually, and individually they have to make sense, and we pick the one that makes sense, most sense over time. The new builds that we took were actually vessels that we had ordered previously, back in 2014, when second-hand values had increased to a level where it made more sense to buy a new build. Unfortunately, this is not the case right now.
Yeah.
Second-hand values are still lagging the respective values of the newer ships. So still, it makes sense to buy second-hand ships, and that's why you've been seeing most people buying second-hand ships. They are still cheap. They are approaching the levels where new builds will become interesting. Not on the container side. There they are extremely low yet, as we said. On the dry they are approaching, but still they have not reached that level. So still you will see not too many new orders being placed.
I guess secondhand, when they get when it gets way above the new building, that's probably a sign that the market is overheated. So
exactly
what you just said, it bears out what you said earlier about there still being some upside.
Yes, yes.
Okay.
We have to be careful. I mean, two things kill this market, both the dry bulk and the container market. Oversupply, which happens when we order too many ships, and a sudden drop on the demand, which does not leave enough time for the markets to adjust. So absent a drop in the demand, we are not seeing, at least for 18 and 19, too many ships coming into the market. So that is what makes us positive.
It's a good dynamic. Let's switch it a little bit. Again, I love talking to you because you're in two different sectors. There are always questions. I don't know if there's a right answer, but there's a debate, a perennial debate about whether a pure play company, meaning it's in one sector, is better for people to invest in, or a company that's in multiple sectors. I think I know the answer because I know the complexion of your company, but I just wonder if you could talk about that, because you certainly get the question, I'm sure, quite a bit.
I get the question quite a bit, and I think that I now have the answer, which is that we have to split the company in two. So we are going to split Euroseas probably in two. We are working on it, trying to see exactly what it takes, but we are going to have a dry bulk company and a container company, hopefully not too late, within the beginning of 2018. When we started, there were no shipping companies in the market, so we thought that that was 10 years ago, right? There were very few shipping companies, so we came in with a mixed fleet, which was what we were doing privately because we wanted to hedge ourselves and have dry bulk and container, and they don't always move in parallel, so we could hedge ourselves. There were no shipping companies in. This worked for a while, but when we started having in the public markets dry bulk companies, container companies, tanker companies, specialized companies, and the investors started forming their opinion of their own on which sector they wanted to hold, we started to see that our model stopped making that much sense. The investor wants to make his own choice if he wants to be in dry bulk or in container. So we have decided that it is time that we split the company in two, have a dry bulk company and a container company. We see it on how our stock price is trading, right? We are trading at below $2 per share. We calculate our NAV to be above $5 per share, so our discount is huge. So we think that we will be able to unlock value just by separating the two companies. And also it will allow us to do some other things that we are thinking of doing, which is to grow the company more, and we cannot really grow it ourselves organically being such a small company. So we are talking to other people about possible mergers. You have a question?
Later. We'll talk a little bit of it. Yeah. But this, what you mentioned, I think with a lot of shipping companies, just always the sum of the parts when you unlock them is usually greater, and I think that's what you're saying. I think that will be proven shortly. All right, let me ask you. It's kind of more general question, but you were one of the earliest listed companies to team up with private equity investors. I know you were public, but then not long after that, then there were 2 or 3 companies that are private funds that you took as partners in a company called Euromar. And I think recently Euroseas has taken back some of those vessels. There's always conversations about private equity exits, in quote. But you've seen the whole cycle, and others maybe have not. I wonder if you have some perspectives on that. This is a big discussion that we can have at another opportunity. We could probably do a whole other interview. We could do another interview to discuss private equity, but and I think the market mostly knows the people they invested, the private equity that invested 6 or 7 years ago needs to get out. They want to get out. They haven't had the opportunity because the market didn't help. It was surprising that we had such a long period of a bad cycle, of a downturn, rather than the usual 5-7 year cycles. So they need to go, and they want to go, and they're bored of this industry, and they've lost money. So they want to find the most efficient way to go, and I think that's what most of these people are working to do, find the most efficient ways to go. A few, very few, have started coming into the market now or came in last year, but it's very few. That's better, I think, for the industry as a whole, because one of the reasons we had this bad time was that so much new money came into the industry. Because of the prior very good years between 2002 and 2008, it attracted a lot of new money. The new money came in, it was too much money, too many ships, the industry went sour. It is correcting. I think we will not have such extreme moves going forward. So in your view, maybe that's not such a bad thing. It leads us to the next question, and one of the things I wanted to ask you about was the role of bank finance. So being in the business 140, 150 years, your company, your family probably has some pretty good relationships with banks. So from where you sit, I wonder if you can comment on the availability of bank finance or the lack of it. One theory was that private equity was going to replace bank finance, but with what you just said, the private equity is looking for the door, the exit. Maybe there is a role for bank finance still. So I wonder if
there is always a role for bank finance, and of course it's because of the problems that bank finance and banks have had on their own. They are lending much less to much fewer people. There is a lack of finance. This is good for the markets. This is one of the reasons that it's helping the markets right now, right? Because not too many ships are being ordered and all that stuff. But there is a gap. Private equity left, banks are giving less money. What's happening? I see 2 trends that have appeared. One trend is all these boutique finance shops that are offering their bank equivalent finance, but at much more expensive rates. And on the equity side, I'm seeing not anymore direct private equity, but mostly preferred equity type of investments. So these two areas are trying to fill in the gap that has been caused by the lack of banking and the lack of private equity. So
we have at the conferences that we go to, and I see you at some of them. I think they talk about alternative finance. So
exactly.
I think
that covers it.
That's kind of what we're talking about.
Yeah.
All right. Let's switch to regulatory questions. The industry is facing a bunch of regulatory changes in the not too distant future, and I'm wondering, whether you feel those are going to be a game changer and how your company is dealing with them, and specifically what I'm talking about two things. The first are the restrictions on sulfur in fuels, which is going to take effect the beginning of 2020. So I think everybody knows this. Right now, the fuel that's burned can be up to 3.5% sulfur content. That's going to, 13 months from now, that's going to go down to 0.5% on January 1st, 2020.
It's not 13 months, it's 25 months or whatever.
I got the wrong year.
We
got a little time.
Yeah, we've got a little time. Don't frighten us that much.
We have a little bit of time.
But still, it's not enough. Yeah.
And the ballast water treatment requirements. Now those have been pushed back. Let me make sure I have the right year. That's 2019 now. But,
yes, but you can. It has to be the first special survey. After that, with a ballast water treatment plant, you can go on existing ships back to 2022, even 2023. You can stretch it out as the time where you need to install that. It has taken so many years for this ballast water treatment plant to be finally adopted and become definitive. And it will become so, and ships will need to have that. And that might help trigger scrapping some of the older ships, because you're going to be needing to spend, anything between 400 and $1 million, depending on the size of the ship, in order to install that. So you will have to have a very good market to see some of the older ships pass special survey and install the ballast water treatment plant. On the sulfur content thing, which comes in 2020, well, first let's see if it actually does come in 2020, because there might be extensions. If it does come in, that means, in my view, that there will be, the refineries will be able to offer this low sulfur content fuel cheaper. I think that will happen. Certainly what I don't see happening within the next 25 months is seeing ships putting on scrubbers, unless you're talking about the very big ships. It can only happen, I think, on very, very big ships. But even up to Kamsarmax size dry bulk, or 6,000-7,000 TEU containers, which is approximately the range that we are, I think nobody really will do it. So we will all be competing on the same level. If it becomes so much more expensive, there are two solutions at the end of the day. One is we all sail slower, which is going to help burn less fuel. That will be great for the environment. It will help everybody. It will help shipping and the environment as well if we sail slower. So that's one good thing that can happen with all these new regulations. The other thing is that eventually, because all the ships are going to be the same, we are all going to be paying the same cost, that cost will be passed over to the consumer. And this is life. I mean, at the end of the day, the poor consumer pays for everything. So whatever regulation we impose, at the end of the day, it goes to the consumer.
It can get passed on. But you're not seeing one scenario that I've heard is that there's not going to be enough low sulfur fuel available. You're not seeing anything of that type.
If there isn't, the regulations will be adapted so that the cargo gets transported. The world cannot cope without transporting the cargo, and the ships that will be capable of burning low sulfur will be extremely few in 25 months. For sure, they will not suffice.
One thing we haven't talked about, and I can presume you're probably not looking at it, is LNG propulsion.
This is for modern new ships. It hasn't happened yet. It might happen. It might be a development of the future, but it hasn't happened yet. It will take time. Our time horizon is less than that. And then being public, it becomes even less than that.
Sure.
Investors care about the next quarters.
Mm-hmm. All right, but it sounds like I think you said it very well. Trade doesn't stop on January 1st,
Exactly.
2020. Okay. You started to talk about the future of the company, how you see it, and I think we'll wind down with a question about looking ahead. So your fleet has been expanded with the acquisition of 5 vessels from Euromar. That was the joint venture with the private equity that we mentioned. You've also mentioned, and I think this is public information, you've announced a letter of intent with Poseidon Containers on a possible combination. This is the transaction you referred to. So Poseidon has, I believe it's 16 container vessels. So taken together with your 11, that would be 27 ships. That's a fairly formidable company. So is it likely we'll see more combinations of this type, you think, between public and private companies? And then if you want to comment, anything you are able to say about Euroseas and Poseidon, I'd be interested, and the viewers would certainly like to hear that.
Yes, Euroseas is coming out of the crisis relatively unscathed. During this last, 8-9 years, we have been able to struggle on, having been a conservative company, have not diluted our shareholders. We only did 2 very small private placements during all this time, in order where they were actually rights issues where all our shareholders participated, raised just 20 million. So we did not dilute our shareholders, even though we went through the worst crisis that we have had.
Because they all bought shares.
Because the ones that bought shares, but it was also very small amounts. So we think that nearly all the other companies diluted their shareholders as of 2009 tremendously more than we did, because we have always been conservative. We're coming out of this crisis now, we feel, with the biggest fleet that we've had, 18 vessels. So we've actually managed to grow during the last 2 years, where we saw that the market was going to start recovering, and we bought cheaply relatively into the company. So we are at a good stage right now. 18 ships is a good number, but it's not good enough. And having decided to split the company in 2, we will have to find other ways to grow both these companies, and we will. Poseidon is one of the ideas that we're talking about and we're considering. We're talking with Mr. Yurukos, who's the principal of Poseidon, and we have a framework agreement on how we can work together. Depending on how his project evolves, he was trying to raise some more equity by a couple of more ships in order to make this company even bigger. This is something that may or may not happen. We will know within Q1 how things go. But this, as I said, is not the only thing that we're looking at. We're looking at transactions on the dry bulk side as well.
Are they similar in nature, to the extent you can talk about a combination of some sort?
We're talking about combinations with other people that have other vessels.
Okay.
And we're very flexible and open to try and do something that makes sense for both parties and for the resulting companies as a whole. So we hope that within 2018 we will see some transformational changes within the company.
So looking forward over the next few years, now that I got my calendar right, thank you for that. So really, what we're looking for is really two thriving companies. One in the container, probably still the smaller container vessels, and one in dry bulk as well.
Fingers crossed, we'll make it happen. Thank you.
That's what we're hoping.
Yep.
Okay. All right. This concludes our interview with Aristides. So thank you so much.
Thank you, Barry. Thanks very much.
Barry Parker for Capital Link shipping. Thank you everybody for watching our interview.